Well, on to our special segment, Charting Trends now. Atul Suri is Chief Executive Officer at Marathon Trends Portfolio Management Services. He's joining us right here in our studios. Atul, it's a pleasure. Great to have you with us here.
So nice to be back.
And chatting face to face. So that's a big one.
Absolutely.
After 2 years, right?
2 years, yeah. That's nice. Of course, I'll bump into you at the airport sometime. You'll be also holidaying a lot.
Prolific travelers, all of you. Atul, let's just start with, just describe and put into context for us the markets right now. And the one big problem which global markets have been facing is inflation, and that has been led by commodity prices going through the roof, going absolutely berserk.
Right.
They've pulled back a little bit, industrial metals, crude oil, everything.
Right.
How are they poised now? Because that will decide which way, what will be the policy function, interest rates, and then, I mean, impact on equities, etc.
I mean, the correlation is very, very evident right now. So, like, let's look at performance of all asset classes over the last 1 year. Clearly, commodities are up there. I mean, in fact, they've almost had 100% kind of gain in a lot of commodities, more so led by your energy basket, which is gas and crude, WTI, Brent, etc., etc. At the bottom, you'll actually find equities. So equities globally have fallen about 20%, plus or minus a few percent here or there. So what you are really seeing is a very big runaway in commodities. And this runaway has happened more so in the last 6 months. Post the whole Russia-Ukraine issue, a lot of commodities, the supplies have got a little squeezed. And that has brought into center stage. So the movement in the last 6 to 7 months in commodities is very sharp. Now, when you have such a large movement in commodities, it does reflect on inflation because, commodities are an input for industry, consumption. Like, look at the US inflation number. I think that was the problem that happened, I think, a week ago or so, which came at 8.6. And that really, put the cat among the pigeons. And that is where you can see bond yields. Now, bond yields also are at the upper band of a 40-year downtrend. So this really brings about a lot of chaos. And, we are having very, very big events. I mean, 1 in a 100-year pandemic. And then you have a war in Europe, 75 years, inflation, once in 40 years. So these are very, very big moves. But I think that the problem, as you rightly put it, is inflation. And this inflation is commodity-led. So for me, what I see this whole correction in equities, if I try to look for a bottom, base, or some opportunity, I think the correction in commodities is very essential because this will cool off. And I personally think that the narrative can change from inflation to growth very soon. And whatever people are talking, whatever set of stocks are moving can actually reverse very fast.
Let me tell our producers to pull up the CR. We have graphics that you sent us. The CRB index, the commodity index, there is Brent and there is copper prices as well. And they all kind of show a similar kind of thing.
Absolutely.
So talk us through those charts. We'll have those up as well.
Sure. So what you see is the CR. Now, the CRB index is nothing but a summation of 19 commodities. So you have agri, you have energy, you have industrial metals, you have precious metals. So it's like what the Nifty is to 50 stocks. This is a 19 commodity index. Now, here also you will find that the commodity index has gone up very, very sharply from Jan. Again, linked to the Feb Ukraine-Russia issue. But, I mean, and this was unstoppable. It was just moving up vertically. Now what you start seeing is that the things are a little bit on a corrective phase. And that is where the hope is. I mean, if you can see the graph, there is something called a 50-day moving average, which is a very good indicator of a medium-term trend. For the first time, that is getting challenged. And you will notice that there is a level of 295 or thereabouts, which is the lower band. So you are seeing the first challenge to the CRB or commodities as a whole. And again, if you see the momentum indicators or whatever studies, you find that it's extremely overbought. So I'm on the camp that we could have a bit of a correction in commodities. I don't think it's going to collapse per se. We're not going to go back to those levels because those were special times. But I think that there's a correction and this whole inflation thing could cool off in the next month or two.
Okay.
So just one thing, on the CRB, on Brent and copper, for example, the fact that you say that we are at important support levels.
Right.
Could it be that they bounce off these levels as well? Because of the same factor that you say, because they're at important support. So it could turn back up.
Yeah, so let's take the three. Why I take Brent? Because obviously it's a very good proxy for the energy basket and it's very important for India, but that's where our major imports are. So you'll find that the stickiest or the strongest commodity actually has been crude and gasoline. These actually have hardly corrected. Went up to 140, then corrected, stabilized. Again, it kind of, moved up to 125. So what you find is that this is something, I mean, every morning, the first thing I watch is how Brent has done overnight.
Yeah.
And every morning I'm like, oh hell, this thing just doesn't correct. This thing just doesn't correct. But in the last, especially I think on Friday, you saw that fall back below 120. So I feel that this could be also a case of the 50-day moving average, which I think is a very good indicator of the medium-term trend getting violated, extremely overbought. And I mean, fingers crossed, but I find that you could even move to around 9,500. Okay. And if that happens, I feel that your whole inflation, narrative can change very fast. See, these are headlines.
Sure.
Yeah. People just, talk about inflation, that's something. But it can all very well change if commodities correct. Second, I want to go to is copper. Copper is called Dr. Copper because it's a very, very good indicator of industrial metals. So what you will see that copper actually has corrected 20-25% from the top. In fact, all industrial metals have corrected very sharply.
Yeah.
Look at what is happening to the stocks in the Indian markets.
Yes.
Your Hindalcos, Tiscos, sales. So there is a very big shift that is happening globally in commodities. We are not talking about it.
Yeah.
But the fact is that they are correcting. Barring energy and barring Brent and WTI, most other commodities have given away 25-30% from the top.
And that's why you're seeing auto stocks rally as well, because commodity prices have come off and it's a beneficial.
It's definitely beneficial. So, what you will see is that you'll find industrial metals have corrected very sharply. I mean, wheat, everyone was talking about this shortage and, world famine, etc., etc. I mean, you look at wheat, it went up vertically, parabolic, when the whole Ukraine issue happened and there was expectation of shortage. But even you'll find agri commodities have corrected in the month and a half.
So if you correlate this to global world markets, right, they seem to be a bit oversold at this point in time. Given that inflation perhaps is cooling off, that is our base case assumption.
Right.
Do you think there's a turnaround, a recovery that we're looking at in world markets as per the charts?
So if I look at global markets, what I notice is that there is extreme pessimism. The oversold readings, again, these are proprietary indicators. I don't think you have it on the screen, but these are proprietary indicators. I wanted to share it with you. But the oversold levels were last seen in the COVID lows of 2020. So what I'm trying to tell you is that the pessimism that there is in the market. So at one side, the whole euphoria in commodities, but actually a lot of underlying commodities are correcting. People are not talking, it's not a narrative. Inflation is still the narrative. But if these commodities remain low for some period of time, I feel that thing can change. And that can be a very big trigger for equities as a thing, because it is extremely oversold. See, there's no good news.
Yeah.
There's no good news.
Yeah.
The moment you have a sliver of good news, I feel that this can lead to a very sharp
Sorry,
pullback.
when you were saying oversold, you were talking about equity indices, Atul?
Yes.
If you take a simple thing like the daily RSI on, say, on the S&P, etc.
Right.
I mean, they're at about, 27, 28 or so.
Right. So that
the
is
range is usually 30 to 70.
Yes.
At bottoms, you go to single digits. So these are not bombed out kind of, it's a very simple
So
thing,
again, now you're looking at daily RSIs. I look at weekly because I look at longer term trends. But the weekly RSIs are actually all around their 20s, 15, 20. And these readings were last seen in the COVID low of 2020. So what I'm trying to tell you is that pessimism. See, these are just numbers.
Absolutely.
You can use weekly, daily. I do weekly. That's just argumentative. But the fact is that look at emotion. Look at markets yesterday. What happened? I mean, that is pure emotion. The screen was pure emotion. There was no sense in what it was. You knew that the rates were false. There was something wrong about it. But it was emotion at play. So these are emotions, what we call.
No, I agree. I'm just playing devil's advocate.
No, that's okay. That's okay.
Atul, let's get to the headline index and the Nifty.
Yeah.
We bounced a little bit from the recent lows.
Right.
In the mid to medium term, what is the downside risk? How low can we go from here? I mean, where do you see some sort of a base? And also, if we are bracing ourselves for a relief rally, where are we headed on the Nifty?
So Nifty actually has been one of the best behaved indexes globally. Let me tell you that. And this is in spite of the fact that we've had some record FII flows.
Yeah.
So let me just take a step back and talk about these FII flows. People wonder that why are FIIs selling? Since April of 21. FIs have consistently been selling, and 3.5 or 3.6 lakh crores or something. It's a humongous figure, right? The fact is that I have over the years observed that FII flows in India are not linked to their love or hate for India. We are a subset of an emerging market basket. So what you need to do is go and look at the MSCI Emerging Market Index. Our markets topped out in October of 21, right? Whatever, 18,600. But the EM index actually topped out in March of 21. A few months before us.
We have the chart up. Go on.
Sorry. And if you start looking at the FII flows, the FII flows have been negative from March 21. So FII flows that are negative or the selling that is there is not that they do not like India, etc., etc. It's overvalued, undervalued. You know, we hear a lot of arguments. We are just a subset of a basket. And the whole EM basket is, I think, over 30% off. The EM index is up 30, 33, 35% off. So India has done very well.
Relatively out.
And I feel that we will emerge post this correction as one of the stronger EMs, simply because number one is that we have proven that we have liquidity and depth. We used to always wonder if FIs sell, who will buy? Well, FIs are selling and markets are not cracking. In fact, we are holding out. I feel a lot of other emerging markets have got very, very badly destabilized of what is happening in China. The narrative has changed. Russia, is it investable? A lot of other markets are actually at the doorsteps of IMF looking for bailouts. It's not just Sri Lanka, Pakistan, it's Egypt, Tunisia, you name it.
Yeah.
So the fact is that India is going to emerge as a much, much stronger market. Fundamentally and as far as allocations go. And I think that when markets reverse, which they will at some point in time, we will be among the first and earliest breakouts happen.
But you know, I wanted to level on the downside. Everyone's asking, will we go to 13,000, 13,500, 14,000, 14,500? I mean, what's
yeah, so that's a point about the Nifty, right?
Yeah.
So what happens is that essentially what Nifty has done, it has you know, it's not just fallen vertically, it's made three lower tops, lower bottoms. I mean, if you really see the chart, it's almost like a parallel kind of play that is happening. Now the bottom of this lower arm heads to around 14,500. I'm not saying it will get there, but in my view, that's how bad it can get. And you know, the globe is very dynamic right now. Things are happening every day. So yeah, if things get bad, they get there. But again, as I pointed out earlier to Prashant, that just as global equities are at record oversold levels, Indian equities also are at record oversold levels, which were last seen in 2020 in the COVID fall. And for longer term investors, I don't know about next week, next month, but for longer term investors who, I mean, I don't know how many people still want to or have the courage to, but I feel that if one has even a 1 year time horizon, I think there are handsome profits to be made, because globally equities are very oversold. This emotion is bad, and these typically become times to invest in. Of course, it's very good reading in a book. Buy when there's blood on the street, be a seller when all of that, the Warren Buffett quotes, etc. But emotion, you saw emotion yesterday in the market.
But it has worked, right? I mean, in the throes of COVID in March of 2020, if you had bought, the next 1 year was perhaps the best time in the last decade that you got to make money.
But Sonia, these look good on paper. Yeah. These look good in the future, but as on that date, it was as on that date. I mean, why I bring out yesterday, because it's recent, but yesterday you should have spoken to any participant in the market. Nobody wanted to take your call.
No, but the question is, if you're saying in the near term it can go to 14,500, what is going to lead it there on the downside? What are the stocks that you'll still be, or the sectors you'll be cautious on?
I'm not saying, it was just a thing to Nigel's question that how bad could it get. So I'm not like, you know, saying 13 and all. I said I don't really see those levels. I think even if it gets bad, it can get to 14.5 or thereabouts, where the lower arm of the support is. But no one can, you know, pick the last 3, 4, 5% if you're an investor, and you will never get the bottom, really. The question is that I personally think that the risk reward is very much in favor of an investor to deploy, not knowing exactly hand on heart where the bottom is, but historically we've seen that such oversold levels are always rewarding.
You know, just one last thing, and we'll talk about sectors which you like on the other side of this break. But before we do that, the US 10-year.
Absolutely.
If you can just talk us through that, and we'll have the graphic up. I mean, a 40-year trend basically broke, right?
Right.
So are you saying it kind of turns back, and what's your sense? Because that's a risk-free rate. Everything else is priced off that.
Absolutely. So, you know, I mean, you can see it on your screen, and I would really want to spend some time and run you through. This is a 40-year chart, right? 1980. And you can see that how US bond yields have been declining. The beauty is that those two black lines have worked beautifully. You can see that how they've pushed up, pushed down, you know, and these are all narratives, like sometimes it's inflation, deflation, a lot of stories, wars, history, presidents have changed, governments have changed, a lot has happened in the last 40 years. But the interesting part is that right to the bottom, you will see that suddenly the bond yields went below the lower arm. This was when you had your COVID and the Fed just went out and flushed the market with money. So what you'll find is that aberration has happened on the downside, where a very beautiful, you know, well-controlled band actually declined and went below that. This was the time when money was almost free. And this is the time when excesses happened. This is the time when if you can go back and see with time that all your crypto charts went off the graph. You'll find that all your NFTs came into vogue. SPACs, or whether you have, your Robinhood trading, meme stocks, all those excesses have actually happened in that phase. And the pullback that has happened has actually brought us back into the band. In fact, it has corrected the excessives that have happened the other side. Yes, we are at the upper end of the band. And yes, it's always a worrisome that, is the 40-year? I don't think so. I think that what has happened is actually the excesses that have happened due to money is getting corrected. And we are at the upper band of the thing. Yes, it's a cause of concern, but no way have we really broken out of this 40-year thing. Yes, overshoots happen. And as my thesis was, where I started with, that in case commodities correct, continue correcting, I feel that the narrative can move away from inflation. And shockingly, in the next half of the year, we would be looking for growth and not be worried about inflation.
Okay, so it won't keep going on the upside. And
I don't
let's
think
hope it does not, absolutely, and stays in that band. Atul, stay with us. We'll take a very quick break here, but we'll talk about sectors. And Atul wants to talk about 3 sectors. There is the real estate, infra, and auto indices. I mean, chartically speaking, we'll tell you what all of that means. Our special segment, Charting Trends, continues. Mitesh Thakur will also join us on the other side on this discussion.